This is Alan Farley from FX Empire. Let's take a look at this week's top stocks, ETFs, and crypto to watch. First up is Amazon. As you can see, Amazon went right back down to the September 20 and March 2021 lows last week. It actually cut through it right around the close of the session, breaking down, almost breaking down from support at those levels. Now, it's very typical for stocks to do a quick turnaround when they stretch into these support levels, but we didn't see that happen with Netflix, which was above support prior to Thursday night's horrible earnings report. It just cut through that channel level that had been there for a very long time like butter. This is something that typically happens. These horizontal support levels stop working when we get into very high VIX levels. Now, VIX is pushing up towards the 30 level, so there's no guarantees that Amazon will recover on Monday or Monday and Tuesday. Target, if the breakdown continues, would be right around down here about the 2050 level, where this cute little cup and handle pattern could get tested and offer a buying opportunity. Moving on, let's take a look at IBM. IBM reports earnings on I think it's on Tuesday night. No, on Monday night. Look all the way back. You see the stock topped out in 2013, and we have this long string of higher lows. The last one right here just a couple of weeks ago. However, IBM in November, and I think it, if you take a look right around here, it's really this sell-off right here. They spun off their slow-moving divisions into Kyndryl Holdings. So this is a new IBM, and this IBM is a much faster-growing company. This is also where their cloud stuff is, and that's the fast-growing stuff. So if they get any sort of inclination to the analyst community that their growth is on track, I think we could get a breakout this year and the start of the first uptrend in, 9 years. Moving on to Bitcoin. Bitcoin is really in retreat right now. As you can see, Bitcoin has come down now and crossed the 786 retracement of this recovery rally that went up to an all-time high in November. Now, once you cross the 786 retracement of something, odds are that it's going to complete 100% retracement. Now, in this case, if Bitcoin comes down to the 28.8 level, we'll also complete this massive double top pattern, which is a very dangerous thing if you're committed ideologically to crypto and to Bitcoin, because a breakdown could take it all the way back down here to about the 12,000 level. Next up is the small cap ETF, which is the Russell 2000 ETF. As you can see, the Russell ETF spent all of last year grinding sideways in this consolidation pattern. It broke out in November, failed to break out at the end of the month, came back down to support bounce. Now it's broken down. This is very, very bearish, and this is something that's being noticed by all market participants because January is the strongest positive seasonality for the small cap universe. And so when you get something like this, it's sending a warning shot all across other capitalization tiers, including mid caps, blue chips, and even mega caps. Now, as for small caps, I think we could fill this gap right here, which is about the 165 level, and crisscross perhaps this 200-week moving average. Finally, Tesla reports later this week, and Tesla's having more of a hard time than I think folks expected. It's crossed over 1,200. You can see right here, 1,200. 3 times now. It's crossed over 1,200 3 times, and it's reversed once, twice, 3 times. We come back down to this level here. We could be looking at a sort of a triple top pattern, or if we take a line and stretch it out here on a clone, right? Put a parallel line here. Then we have some sort of like parallel channel going down about to the 800 level. Now, I kind of like this one better than a triple top, because I do think it's going to have to take out this low before it finds buying interest. So the level to watch is probably here and probably a little bit later in the quarter in February or March.